Step into the game, we're talking wood and grain. Charles bring the heat on Southern Yellow Pine. Mascot U.S. species, all is on the line. Gregg with the spruce, keeping knowledge defined. Ash and moderates, drop the facts in the booth. We on the buy, the sell ain't no hidden truth. Economics and trends, we got it all so clear. Lumber Word Podcast, best believe we're here. If you want to make more, get in on the score. Join us every week, you'll be hungry for more. Love a been keen, though, whoop made known. Such rain Charleston, slide, plum ram known. Open to the scene, for the lumber supreme. Charles laying down facts with that southern yellow bling. Mac got that U.S. swagger like strong timber beams. Gregg's insights on spruce, rewrite the themes. Got the buy side talk, we stacking that flow. Selling knowledge, every week we still a show. Join the Lumber Word crew, let your business grow. For the sharpest minds, here's where the place to go.
Hey everybody, welcome to this week's episode of the Lumber Word, episode 148, boys. We're recording it on the 3rd of December, missed last week. Glad to all be back, and we have a recurring guest, which we're happy to have again, Kyle Little from Sherwood Lumber and chairman of NAWLA. Kyle, glad you're back on. Kyle reached out after we were talking about going to the NAWLA show. Gregg's like, shit, let's have Kyle on again and we could talk lumber and talk NAWLA. And Gregg, from being a past NAWLA chairman, why don't you take this one on?
I feel like, we might have been a little harsh on the show, coming back from the traders market. I mean, I think we showed a little bit of disappointment in, some of the things. And, having Kyle on to kind of update us on where we may have gone wrong on that is great. And, talk about the future and all the good stuff. I mean, we were a little hard on the traders market.
Well, first off, thanks guys for having me on. I love coming on regardless of the environment, regardless of the topics. I think this is what you guys do for the industry is awesome and provides a wealth of knowledge and insight to people that, don't have access to it. So thank you for letting me be part of it.
Yeah, some people think, Kyle, we share too much information.
Well, I think the thing is
Kyle, I have a question.
Yeah, go ahead. Sorry, let's go, Matt.
Are you guys getting blasted with snow also?
Well, we were on the snow rain line. So here on Long Island, we just got rain, but north of us in our largest distribution center in Massachusetts, they got like a foot of snow yesterday. So it's really early getting snow for us out here on the Northeast as well. So, and I don't think the temperatures are going to go below freezing for the next week and a halch from what I see in the forecast. It's going to be cold.
Yeah.
Yeah. It's going to be challenging out there. It's wintertime and it's come a little bit early. And I think, the environment, given the market challenges that we have, dealing with seasonal slowness, well, it's already been slow. So this is another excuse to go out there and make us feel really good about, the lumber business and what have you. But, we'll work through it like we do every year, through this period of time. So,
you can freeze dry lumber for a few
outlook
months
right now for, for the market. I mean, we've, if you've listened to the show for the last 4 months, we've been trying to give people hope and, that things were going to get better. And, and I feel like, we've given hope in one hand and shit in the other, and they keep putting them together, and you know what they end up with, right? I mean,
right. Yeah.
I feel like we've done a disservice to our viewers, in giving them hope. And, we're better off just to say there's no hope. It's never getting better.
Well, I think when everybody decides, when everybody kind of gets on that one edge of the pendulum, you going into 2025, I think we were all hopeful. We were all excited about, at the end of 2024, going into 25 of what was going to come. We expected 2025 to be better than 2024. And in fact, it wasn't better. It wasn't even the same. It was worse. Right. And I think we were all too optimistic, given maybe some of the fundamental and structural changes in the marketplace that nobody was really, recognizing or maybe we were just too hopeful with the new administration that some of those things would change. I think the difference this year is everybody's at the other end of the pendulum in 2025. There is no hope for 2026. They're hoping they can get through it in preparation for 2027. That's what I heard at NAWLA this past, back in November. And what I continue to hear today with a lot of builders, with a lot of manufactured home builders and retailers, manufacturers alike. So I think it's really, we've all been in this industry a long time. Maybe Charles not as long, but we went through the worst of times, or what we thought were the worst of times, in 2006 through 2011, let's say. And then 2006 was still amazing, but it was like the tailwind. It was the end of realizing what the other side of the equation was going to be. And going from 2 million housing starts to 400,000 housing starts, we've dropped 20-30% from our peak to where we are today now. And it feels like so bad out there, but there's still a tremendous amount of liquidity in the marketplace. It's just, there's just way too much supply. And that's going to have to, continue to right size itself. And the hopes would be that, demand comes back to the marketplace at some point. But it's going to take longer than we expected. Just like, we overbuilt in 2021, 22, 23. And this is the backside of that event, right? And it takes a while for that thing to work itself out. So, we're challenged with that. And
I had a guy gave me an interesting, perspective in that, and this has to do with, the industry as a whole, is that, when you think about the outsized profits that the industry experienced during COVID, I routinely tell people, I run into them, I go, yeah, I really miss COVID. They look at me like, what's wrong with you? There's something wrong with you. I go, no,
you said that to a guy yesterday.
Yeah. I say it all the time. It's like, and everybody thinks, yeah, man, what's wrong with you?
And I'm pissed. I'm pissed. You can't say that around me anymore, because I'm like, I missed those 3 years trading. So like, I didn't have a chance to build the rest of my career nest egg up, but go ahead.
And I apologize for that. I apologize for that.
That's okay.
Salt.
That's okay.
For that salt. But the perspective is like, this is the payback this is the takeaway, right? So for every action, there's an equal and opposite. During that time, it was super outsized profits, and whether you were a manufacturer, distributor, retail end user, homeowner, you benefited greatly. And now we're taking that away. And it appears that it's the hardest right now on the manufacturers. I don't know. What's your sense, Kyle?
Gregg, that's
for this year.
I think it's hard on distribution this year, not to the equation of what the producers are dealing with, but having an inventory right now has not provided a tremendous amount of dividends to the bottom line, right? It's just been able to kind of keep you, rolling along, and maybe a little bit more liquid, being able to sell every day, smaller quantities more often, but you're not getting there's not an opportunity to get your normal value price in the marketplace. You're subject to everybody else that at certain points of time that's trying to liquidate one thing here. And we all know that sometimes one truckload that's kind of out there at a cheap price kind of sets the price for everybody else in the marketplace. And that's we're dealing with that every single day in the distribution world. So
gather around, kids, because Uncle Matt's going to chat about this for a second, because I think I think what you're saying, Kyle, is
Professor.
Well, I totally agree with both you and Kyle. And the overall tone, when I hear you say we've been giving our fans a disservice and we should all be suicidal and negative, I actually get excited, because that's when I want to start being long, and I want to start thinking about 2026 in a more positive fashion. Not to say that demand's going to come roaring back, or that we're going to go up $100 tomorrow, but Ashley taught me this years ago. When everybody's on the one side of the boat, you might want to walk over to the other side just to be safe. And so I'm a much more optimistic going into 2026 than I was going into 2025. And I'll tell you why. In 2025, I've got all these contracts. I've got a supply a bunch of lumber every month. Some of it's open market, some of it's tied up to other contracts or pass-through contracts. But, this stuff isn't easy to buy. It's not like I can just go out and buy gut ball randoms and ship them on my contracts. I have to buy tough tallies and tough items. And so in 2025, did I contract out those myself? No. I just held on to them. I just took the risk that I'd be able to find them in the open market. And for the most part, that strategy paid off. In 2026, I'm more fearful going into 2026 that it's going to be much harder for me to find these things because of mill shutdowns, either permanent or temporary. And so I'm looking at 2026 with the idea that maybe I want to have more of this stuff covered up before I get there, right? And that's working. I didn't have any fear in 2025. In fact, I made most of my profits on the short side. Like Kyle talked about, there's not much of a dividend in holding inventory with a fixed cost on it, paying unload charges and storage fees and all that stuff. And then you get slippage and loss and all these things that happen when you hold inventory. Meanwhile, every time I sell a spike in the futures market, I make, 10%. So like the best orders a guy would have had in 2025 was on the shorts. Just sell ahead and then buy it later. Well, I don't know that math is necessarily going to work in 2026 when you've got a third of the sawmills that you used to buy from aren't around or don't want to sell them anymore because contracted it out. Things are going to change. Things are going to change, and they're changing right now, and people don't want to think about it. They just want to be negative. And it's like, okay, well, time to start thinking ahead. Don't think about what happened the last 3 months. Think about what's going to happen the next 3 months. There you go.
Matt, what do you
what do people see in terms of contracts for next year? Are mills doing more or less? Do customers want to do more or less?
Well, based on
customers want to do
based on
less.
the current, but like say relative based on the current outflow, right? Because if you're obviously building less houses, relative, are they still doing 50%? What are they doing based on their? Does that sound right, Greg? Like how are they doing relative to what?
Yeah, I was just thinking of like what we've seen so far is we've seen some people reduce their contracts with us, eliminate their contracts with us. I don't know that we've seen, I guess we've had one like new contract
On a premium product because less euro.
On a premium product, to replace. Yeah. So no, I'm just wondering, Kyle, what do you think?
Yeah, my feeling is we're seeing less people interested in contracts. We're actually trying to, put together at least more commitments on the supply side from our distribution needs because we're fearful of not having supply at some point in the future because supply is going away. And I know demand is cyclically going to change and get better. And that we will be in a situation sometime, I believe more near future than far future, where we have a tremendous imbalance in supply and demand the other way, not what we have today, right? Where we are an oversupplied situation. We're going to be in an undersupplied situation if we just move back to the mean of the true consumption of North America. Because we're overshooting here on the downside.
Matt, what was your thoughts on that?
Well, just to talk about contracts, Greg, to answer your question, I lost one contract completely. Another contract was reduced by 1 car a month, so that's really negligible. Another contract reduced by 2 cars a month, also kind of negligible. But then another contract came in, new business that made up for that and then some. So my net contract exposure going into 2026 is slightly higher than 2025 was. At the mill level, I have had mills be very receptive to me talking about contracts. Even mills that don't normally want a contract have actually been talking to me about contracting. And they're no fans of Hampton. They compete with us, like you guys don't understand. Just because I work for a big sawmill, there's also some downsides to that, right? I mean, some other sawmills don't want to do business with us because they see us as competition. So that I think is the mills are definitely more receptive to talking about contracts because I think they've lost some contracts and they want to have some sort of surety going into 2026 that's appealing to them. At the same time, the customers, by and large, the tone seems to be that they don't want to do as much. And my feeling is that, like Kyle, I believe demand's going to come back at some point. We all can read a seasonal chart. I don't want to be stuck there holding on to a shit sandwich going, how am I going to cover all this stuff? It's like, I don't think it's going to be super easy to make money on the short side the whole year of 2026. I really don't. And I think 2026 is going to be maybe a little bit more volatile than 2025 was.
This is I was talking to a mill today that does, has their fingers in every U.S. species, southern pine, eastern, western spruce. And they were telling me, and Charles, maybe you can jump in on this one. I asked him the same question. Are you seeing less contracts? And I was almost expecting him to say yes, right? That, in my mind, that's the movie going on in my head. And it doesn't mean it's right. Yeah. And their answer was like, kind of made me think, it goes, not really much less on the spruce side and everything, because everybody that's locked in with that wants that product. But they're seeing more interest on the southern pine side. I'm like, really? Like, why? And they go, well, a lot of mills are quietly closing. They're not announcing it. They're just taking, Charles, you point this out a lot. Hey, did you see this news story in this, magazine that only loggers read about this mill shutting down or doing something? Like they're not announcing it. They're taking downside. Am I wrong there, Charles? Or you think, maybe southern pine will be the real thing that we see some more curtailments?
Well, I think there's the source of contracts are changing hands, right? To Matt's point, he's net neutral, right? And I think a lot of that is due to people that typically don't have contracts or pursuing that, and guys that were heavy contracts going into 25 want to reduce their contractual exposure, right? As far as Southern Yellow Pine goes, I think, as we've discussed before, the secondary markets are really going to drive the volatility in pine, right? You got the Midwest and some Northeast markets that are now consuming it on a fairly regular basis. And if spruce becomes a $180 discount, right, and you're talking $750, $780 wood on a delivered basis, you're going to see more demand from the pine side. And I think people are hedging that probability by taking the pine contracts at a lower clip than they would have if they were spruce contracts, but it's still more consumption on that species specific side.
And Charles, we had this conversation like 2 weeks ago. On the back end of the call, Gregg said something like, shit, I think I'll just buy some CME Southern Pine contracts. And I'm like, well, he never says that, right? And yeah.
I'm the vortex.
And it's like, it makes sense with the cost of carry. If you go out farther and you look at what 2x4 is, right? In my opinion, it's not a recommendation, but 2x4 is just cheap on that to hold, right?
Ashley, going back to the contracts more or less, I think from a net perspective, the mills as a percentage of their sales are going to have less contracts in 2026.
That would be my feeling.
Than they'd have in 2025. Yeah. What Matt is seeing, I believe, is the people that are getting out of those commitments, the mills are trying to find other people to fill those gaps.
Non-traditional.
I think from a net basis, if we look at the overall wood being consumed in North America next year, there's going to be less available, or there's going to be more available in the open market than relative to contract that's already committed to in that period of time. That's like that. The way I'm reading it. I could be wrong, but I do believe from an overall net measurement, you're going to see that less, because there are other mills that do not want to do contracts with the uncertainty of tariffs, the uncertainty of the situation in the trade environment, and they're why would they want to commit, for however long of a period of time of taking a loss, right? So like they're hoping that they're going to get a better price. So I've seen more contracts being thrown at us with a minimum price threshold this year, which I've never seen that.
We've heard that. We've heard that also. So I guess my point is, they put a minimum threshold. Did they put a cap at the top of it too?
Yeah, that'd be great.
I think
it's all for negotiation, Ashley.
So I didn't go that far.
Hey, Charles, question for you.
Out.
Charles?
Yes, sir. Yeah.
Charles, what are your thoughts about yellow pine, the state of things overall? your crystal ball, where do you think we're gonna end up here in the next 3 to 6 months in terms of the supply demand ratio?
I mean, I don't know what the current ratio is, but I think it'll be a little bit more in check than it is currently, right? I mean, you have seasonal downward trends, you have weather, you have winter, you have everybody basically being worn out and trading lumber for the past 12 months on rumors and hearsay between tariffs and no tariffs and taxes and no taxes and date changes and all this stuff. I think overall you will see a firming, but it'll be a slow and steady burn, and it'll catch some people off sides. And then I think when you get into spring, and Matt, you and I actually for the first time in a really long time, about a month ago, agreed on this, that like March, April is kind of that magic time frame where you might see things escalate. And to confirm Kyle's point, that's kind of more of a near term versus a long term perspective where those price differences escalate.
Yeah.
So flat to sideways, 5, 10, 15 here, there, yonder, you know, you can still buy deals if you buy very specific items every single day, every single week. But I think Southern Yellow Pine mills are paying more attention and going to market a little bit differently than they have based on the circumstances and some of the things that have been done.
I mean, they're actually making outgoing. They're actually making outgoing phone calls.
Do the Yellow Piles operate?
I mean, I didn't go that far.
Sorry.
Yeah. Okay, hold on there, Ash.
I have a lot of really good friends that are mill reps. They are. They're working their ass off to try to get a return, but they're also paying attention to some of these things they never had to in the past, right? Because they've had such a low cost of production, and they've always been able to find a way to lower that, comparatively speaking, to other North American species. But they're having a key on what that magic number is.
Do the Yellow Pine mills make, sell, or do they sell, make? Like the Euros sell, make.
Tell me. What's y'all's approach going to be? What's your approach going to be, Matt?
Western mills make, sell, right? I mean, we just take product to the log.
Oh, yeah, because you got 3 weeks to get it.
We're cutting variable size logs. We're running long lengths. We're running 2x8, 2x10, 2. Till we run whatever's the most efficient thing to run through the sawmill. We're not cut to length mills, so we just have to produce what the log provides.
I love that. That's the first time I've ever heard that.
So we've always been make, sell.
That's the first time I've ever heard that.
North American mills all make, sell. European mills.
But, you know, during 2008, 2011 timeframe, we switched to sell, make, right? Because we had to. So the question I have is, do the Yellow Pine mills operate under typically a sell, make model or a make, sell model? Because that's going to affect their sales strategy going into 2026 for sure. If they've switched over to, they're going to tighten up the screws. And if they're selling make, sell, it'll be, like you said, a slow grind. If they can shift away from the things that cause them all the trouble.
One of the interesting things, you know, last week when Charles, you know, like, you know, we were talking about the Yellow Pine and the futures is, you know, that I'd done some work over the weekend on how the different markets react. And one of the things that came up was that 4-inch pine trades strong to Western spruce in the first half of the year, and it trades weak to spruce in the second half of the year. So when you looked at the range,
why would you say that is, Greg? Why would you say that is?
Well, let me say one other thing, and then I'll throw something.
I didn't mean to interrupt you. I apologize.
It's okay when you're in the she shed.
This is a conversation. You know what I mean? That's okay. I'm good. You know, do we need to talk about my wife's video that she wanted me to watch on listening? You know, I didn't hear what, huh?
Yeah.
You know, the spread last year was, I think the number was 21 to 200. Right? You think about that. And, you know, if you look today, I think it's like 50 right now.
Well, it's 50 when you look at mill to east side, but when you look at delivered Chicago, yeah.
My gut would tell me there's 2 factors into that. To take the demand for 2x4 in the first half of the year is probably higher, for a little higher. It doesn't have to be a lot higher than and 2x4 Southern Yellow Pine, right? For the spring building season and so forth. And then I think the production shifts too. I think earlier in the year, you have the larger log size. You're producing less 4-inch, more 10, 12-inch wides. And so that adds to the premium that 2x4 number 2 gets during that period of time. As you get into the smaller logs in the second half of the year, there's more 4 and 6-inch being produced. The price relative to Western spruce goes down. That would be my first high level. I think that's probably the phenomena that you're observing in the pricing structure. But I'm sure there's other regional and other things that would be independent of that.
Treaters. That's the answer.
The treater business is high, right? Demand is high during that period of time, right?
The answer is treaters. Because, I mean, to kind of touch on the cutting profile that Kyle just discussed, I mean, you don't have very many mills that are running logs to run 4 to 12-inch anymore, right? You got a bunch of chip and saw. And if they're running a big log line, they also have a small log line, which small log is going to produce more individual pieces faster than a big log line. So to necessitate that premium, you've got to have the takeaway. And the way you have that takeaway is through treater and retail distribution. That's the answer. Because if you think about it, to your spring building season and your buy up to build inventory going into it starts at the end of February, goes through May, early June sometimes, depending on the current economic status, right, in Southern Yellow Pine, but we'll cut it back 30 days and call it April this year. So you got a 90-day window to where more people are going to buy 4-inch pine that are not going to be in the market in August at the same clip, right? They're going to be in the market, but they're not going to be at it at the same clip. And that's
and really those treaters literally just come in and buy cash. I mean, so that's another.
I mean, I'd venture to guess, I don't know this to be fact, but I'd venture to guess that those guys are probably on a 50-50, 60-40 contract open market deal. And that's the way they hedge their contracts, because you're going print for print or print plus freight or whatever the number is, right, to their big retail guys. But that's how they do it, and then they average it down to open market cash. I mean, you have to have the ability to do that on the back end of that buying season, or you're going to be hammered.
So,
because
there's actually three gigantic forces that all hit the market or roughly around the same time in the first half of the year. One of them is the treaters. I mean, they'll start buying now, right? I mean, you can sell some treater stock to some guys that I sell to that'll buy now, and they'll just sit on it all through the winter and worry about it in March or April and shove it into a dunk tube in the upper Midwest. And then you've got also the home center guys. They tend to bulk up their inventories starting in February, and that'll last all the way through Memorial Day, right? So there's another giant moving factor that sucks up premium lumber for a length of time. And then you've got the normal spring building season that we all are aware of in our own businesses that just sort of arrives. It depends on weather and location, but we all know that there is a spring building season in just regular stick lumber. So you got all three of those things happening in the next 90 to, well, not even that, 30 to 90 days, right? And then the carryover is whatever happens after that into June 1st. And I kind of just cut the year in half. Like June 1st, I start thinking about reducing my inventory, reducing my exposure. I act like a yellow pine mill. I figure I'm going to make all my hay in the first half of the year and then just hold on for dear life in the second half of the year and see how it goes.
How do you stay ahead in the softwood lumber market? With prices shifting and trends evolving, making confident decisions starts with having the right insights. That's where Fast Market's lumber commentary can help. Every month, we provide clear, expert analysis of North American softwood lumber trends. Whether it's housing starts, remodeling projects, or industrial production, we break down what's driving demand. You'll also get access to the trusted Random Lengths framing lumber composite price, along with key historical data and future forecasts to guide your strategy. And it's not just the numbers. Our analysts translate complex data into actionable insights, helping you make smarter, faster decisions. Get the clarity you need. Find out more at fastmarkets.com/lumbertalk.
I want to change gears, Ash, and talk a little bit about multifamily. 2020.
Is that good?
Gregg would make a great moderator for like a panel.
2025, 2025 multifamily was down 40% from the prior year. The most recent numbers that we have, multifamily is kind of flat to marginally. I think it's marginally higher. I mean, we'll get November housing starts in a couple of weeks, and they'll probably update and like make up some number for October. Just like make a number up. Could be, hey, where do you get it? I don't know. It's like, we were shut down, so we don't know. But so Matt, you had a great point earlier. Hey, you know what? I was net short all year. That was a great strategy. The people that benefit the most from that strategy, multifamily, that segment of the market is pretty much always net short. I mean, they can never cover enough stuff to cover all of their commitments. And so 2025 has been a really good year for that. I'm looking at 26 and I'm saying, like, what do we think demand's going to be on the multifamily side? And then also, like, what's the strategy right now on what's covered? I mean, we have, I'll say, our book at Sitka in terms of exposure for 2026 is zero right now, right? We have the only business that we've done has been people that have been willing to buy and hold. And, because, hey, we'll sell it to you for $400 and ship it in, over the next 30 days, or we'll sell it to you for $500 in February or March. What do you want to do? They've all chosen the former, which makes sense. I guess I get my sense from Charles and Kyle, what you guys see.
I can tell you that the multifamily quotes have been relatively quiet the last 5 to 6 weeks since post NAWLA. The business that we do have business into 2026, but we've been very disciplined in making sure that we're sticking to the premiums that the forward curve is telling us we need to be selling the lumber at. We're missing a lot of business because of that, because I get it. People don't want to pay that premium, but we do have some clients.
So my point is, are you missing it, or is it just not getting placed?
It's not getting bought.
It's hard to determine that.
Okay.
But we've chosen not to really chase the business. We do give some opportunity, like you said, to buy it in cash, and we'll disperse it over the next 60 or 90 days. But that's it. If you want to do that, some have taken us up on that opportunity. Not a lot have. So I think the business, to your point, probably is still short out there, has not been fully covered. There's some opportunities that will, or probably skeletons in the closet that are going to be, exposed at some point in the future.
Matt, what do you deal with the multifamily side? You got a handful of multifamily customers. What are they doing on the wholesale and mill level?
I think for us, it's been mildly better here the last 60 days, let's say. But I think that was just because we finally got a bunch of shipments to come through that were all delayed from, August, September and things like that. And new business, like Kyle and Charles, you alluded to, I think it's harder to wrap it up the further out you go. So, I mean, if you want to talk January, February, you can probably get some stuff done right now, just even on a cash and hold basis. But if you're talking March, April, May, June starts, then you look at these back months on the board and you're like, well, this is where I need to be. And here's my appropriate risk profile. And they're like, nah, they just, like you said, I think Charles was pretty much outright saying that's not even covered. And I tend to agree. I mean, look, we started the whole conversation on the pod about how negative everybody is. I mean, that extends to our customers too, right? This isn't any fun for them. And so, when everybody gets on that side of the boat, again, Ashley taught me this, you might want to walk towards the other end of the boat. And I wouldn't take a bunch of uncovered risk for May shipment right now without a appropriate profit margin built into it. I mean, we could go up $100 instantaneously right now if 2 mills shut down. It's
And Matt,
It's just not a time to be short. We just wrung out all the value
for
of this
$100
market.
down.
And Matt, Gregg taught me that when
are you going to go down another 100 from here?
Greg, Matt, Greg taught me that when I was first working with him, and I was buying all the overvalued and selling the undervalued items. I did pay some.
He was a momentum trader. He's a momentum trader.
By the time I had met you, Matt, I had paid some tuition to learn that. If that makes sense.
So, but I was going back to Gregg's thing. I think, if you ask about like what's multifamily look like in 2026 relative to 2025, I would think that it gets slightly better as from a demand perspective because of one, we have to address this affordability issue in some way, form or fashion. So for the first time home buyers, multifamily is an option. And so I do believe, assuming the job market is stabilized, that multifamily will, be better as we move forward. I think single family is probably still in question, but multifamily probably is going to perform slightly better than that based off of the entry points in the market needs in certain areas.
I continue to struggle with a lot of things, but the one in particular is, we've got, this will be the first year in I don't know how many years where we're going to have a negative population due to net out migration, whether through self deportation or forced deportation.
They're just basically a net zero right now, right? Where it's
right.
Yeah. So hey, listen, population growth, that's a headwind or a tailwind for housing for sure. I'd like to think you're right about multifamily being marginally better. I mean, single family still has a struggle with the whole affordability. Ash and I have been having this big discussion about how the younger generation are really unhappy.
With your generation, they don't like you.
With boomers, that's like you guys have taken everything. You took all the drugs, you took all the rock and roll. You took, you got all the houses, you got all the stocks, you have everything. Where's our stuff, right? I mean, and I go back to that. Part of the problem is this whole like student loan. It's just absolutely criminal that our government has indebted young people so that they could funnel money through them to a certain group of boomers. I'm not in that group. It's a group of academics that, they just sucked it up. And, it's BS. Kyle, you and Matt are
we could go
right
into
now with your kids' college tuition.
I
right?
know. I'm in year 2 of private college tuition.
Yeah, I mean, it's absolutely
the only thing that's
insane.
saving my bacon is that my kids got scholarship money. If they hadn't have got scholarship money, this whole dealio free ride that dad's been providing wouldn't have ever occurred. I would be like, yeah, you can go to Oregon State. You can pay for it yourself.
Lucky enough to fund that 529 plan early. If I didn't do that, I'd be in the same.
Yeah.
But Charles, so you're putting money away, right? I mean, huh? You're putting money away, Charles.
Yeah.
I think
his kids getting real time education.
Yeah, based on my kids' attitudes, I think it's better off I put them back exactly where my money's at.
Hey, one thing.
I think Tuck's going to do just fine, man. Tuck's going to do just fine.
But if you have a work ethic, there's the one thing that'll separate you from everybody else.
Make yourself useful every day.
The only thing you can control is your inability or your ability to prevent somebody from outworking you, and that's literally what I teach my kids. So,
amen.
I think,
that's awesome.
We all have our own perspective of college.
Along those lines, I have a question for the group. Since it's slow and people are all negative, do we have any little tidbits of wisdom or advice that help you get through markets like this?
Yeah, I took some of your advice the week of Thanksgiving, Matt. I answered the phone when nobody else would. I sold a ton of wood the week of Thanksgiving.
Yeah.
Well, I think you talk about that, Charles. I think being gracious, look, we're in a great industry, and the opportunity to talk with you guys, to talk with, our customers and our mills and our service providers, this business is so important to our overall economy and the people inside of it. It's such a big small business. So they're so like-minded. We might not be exactly the same and come from exactly the same backgrounds, but there's more similarities than there are differences, and genuinely good people. So it sucks right now. It's challenging. It's one of the toughest environments that we've seen in the last 10 years. But we've seen tougher, and we got through it.
Yeah.
And it's going to get better. And I'm just thankful for the opportunity to be able to be part of my team here at Sherwood, part of NAWLA and this industry. I think it's just, it's provided, I'm a 4th generation lumberman. So my family has sawdust in the veins. So it's provided my, immediate family a lot of benefits. So I'm super thankful to be part of it. And I think, you show that to your customer base and the people you do business with. I mean, it goes a tremendous way.
Basically, what you guys said, you want to show your customers, when you figure out how to make money, show them how they can make money, right? Show them something new, show them something different. And but by saying that, I know we say we give away too much information a lot, but the one thing I've been thinking about, yesterday, a guy called me the other day on the way home, and for 3 years, we have had basically a contango market where we've had big premiums in the back, and they're crazy premiums. I mean, these are the premiums I remember back in the 2000s, 90s, 2000s, where if you could get a $30 basis on something, my God, you would say that I'm going to go borrow money to do that. We've had $70, $90 basis on stuff and rolls for 3 years. And when I look at what we just bought straight lengths at in the West for 8s, 10s, and 12s, and in the East on 14s and 16s yesterday, you got a $70 basis again on some of these. So actually, if you're a distributor right now and you've been hedging and rolling, you've done pretty damn good. I mean, and you've made money. And the conversation I had with my buddy last night on the phone is he's like, I'm trying to show people how to do this, and they don't believe me that they can make money. And this is where, just talking to Gregg, he's leaning. I'm like, you know what? I'm having a hard time trying to convince people to hedge because they don't want to anymore and they don't even know how to. And maybe we should just continue to do it. And I mean, we were the first two guys. We made the first 2 futures deliveries in this new contract in November. And, CME is doing a great job. We're going to get some new species on there. Some of the Hemfir North, Dougfir North is going to be able to get delivered now, hopefully in the next contract. The CME contract, if you're not utilizing that and you're in this business, and I know everybody here on this call does, and it's almost like, Ash, shut the F up and don't tell everybody, because what do you
Ash, I even did deliveries in November. I typically don't do many, but I was like, why not? It's silly not to.
Yeah.
Here's my disconnect right this minute. If you look in the last 4 or 5 trading days, we have increased open interest about 1,500 to 2,000 contracts. We're up over 10,000 contracts, which is the high water mark that we've been at. And I look at it and I go, okay, so you've got a huge premium. You're a $35, $40 premium to the deliverable product in January, add another $30 or $40 for March. And you've got a lot of things that are undervalued. So I understand the sellers. But what I don't understand is the buyers. I mean, I'm grateful for them to be carrying the premium, but I'm going, okay, who are these folks, and what's their thought?
We're excited to welcome another sponsor to the Lumber Word, Lehman's Lumber Guide. Matt Lehman has spent decades studying lumber cycles, and what makes his analysis different is that he doesn't just tell you where the market is today, he shows you where and why it moves. People across the lumber and panel supply chain, from mills to traders, builders, and buyers, have found Matt's work spot on and made it part of their go-to playbook for making smarter decisions. I'm Ashley Buckhold, host of the Lumber Word. I've had a chance to dive into Matt's publication and attend his events. and they're always fascinating. What really stands out is the community around them. People across the supply chain learning together, sharing insights, and sharpening their skills, just like we do here on the podcast. Layman's Lumber Guide is now part of the Lumber Word family, and we're grateful for their support. After you head to laymansguide.com, that's LAYMANSGUIDE.com, click on the 1-month free trial and sign up today. Thanks again to Matt and his team for helping our industry learn and grow together.
Yeah, I don't know. I mean, it's a mystery, and I look, I'm thankful for him, because if we weren't getting these big premiums, it would really make the math on hedging a lot harder, right? It's been simple. We've had big premiums, you just sell into them and go to sleep. Back to the conversation we were just having about tips or tricks or how to deal with these types of slow, tough markets. Kyle's first thought was gratitude. And I think not only is that important in the lumber business, but it's just important in life. I mean, I tell my kids that. It's like, you can go through life as a victim, or you can go through life as not a victim. And if you want to go through life as not a victim, then you just need to be full of gratitude and full of thankfulness. And you're always going to have people that are going to want to help you because you have the right attitude towards things. And so don't be a victim, be thankful, be gracious, and good things will happen to you. Right. So that's a good point.
My wife was doing her AI Kabbalah guru gratitude today in the car. So
What is that?
exactly.
Yeah,
Why did
exactly.
you ask?
It's a story.
It was
What
all
is
about
that?
gratitude. And so that's like the third time I heard it today, and it makes sense. I mean,
I think it's just a good life skill, right?
Yeah.
I mean, like, really, you just kind of look at, like, I'm thankful I've got we all have people in our lives that we're grateful for. But so that's a great feeling to have at all times. But beyond that, like, these are the types of markets where my combination of being willing to outwork the next guy, trying to find items that aren't necessarily my normal items that I can make money on, right? So, like, I'm going to be a much more sort of whack-a-mole trader right now. You know, like, normally I'm focused on what I'm focused on, my core business and maybe a few other things. But in these kind of markets, I focus on everything. I'm looking for opportunities, and then I'm going to go present those to my customers. And then the final piece of the puzzle is give your customer what they want. Give up something that they want that you don't necessarily have, but you'll make them a deal on it, and you'll figure out a way to cover it one way or another. You're just going to give them what they want. But in return for that, with the smile on your face, Mr. Customer, I need something from you, right? So you can turn your problem into a solution where it's a tit for tat. And to me, that kind of trading, it's not combat trading. You're literally giving up something of value for your customer, and you're maybe just taking a bad short, but you're saying, here, I'll do this for you. Here's your straight car 16s you want cheaper than the market. But I need this from you. And so with those attitudes, I think you can navigate these markets a lot more, more enjoyably and also more profitably. You're going to end up, being more productive. And you'll walk out at the end of the day and you'll say, like, I made a hard effort today, and I succeeded. And you won't be kicking the dog when you get
Matt,
home.
you sent out those 2 cars of like Hemfer, white Hemfer, 2x4, 812s, 2420s, and 2 and better.
20s.
I tried to convince Gregg to buy those, but I mean, I understand why, but like, it made me think you offer those out. Like, those are so freaking cheap that.
I mean, if I had a chop saw, I'd just haul off and make a cheap offer and buy them and cut 4 feet off, write those down to 200, sell them to a truss yard, and then keep the 16s and make $30, $40, $1,000 on them. But I don't have a chop saw. So somebody that's got a chop saw, I might want to buy them, right?
Yeah.
That's literally what you should do with them.
I think going back to, Matt, you talk about being flexible, being a problem solver, being nimble, being quick. Those are things that are so important, like in markets like this. You can't be encumbered with layers upon layers of bad decisions, right? The key is trying to go out there and be liquid and lean and mean in an environment like this. And I think that's kind of what we saw. And get back to the NAWLA thing. Your observations at NAWLA, while some were critical or what have you. Like I think it was relevant to what is happening today in the marketplace. I mean, people are struggling. They're not making money in the way that they should. Sawmills are bleeding money, in big ways. And and we saw an event that normally would have 1,500 to 1,700 people there. I think we ended up with 1,150 or something like that. I mean, I can just use Sherwood as an example. We typically would take 12 or 15 people there. We made a conscious decision, as a group, because of times are difficult. We don't want to have the extra spend, even though there is opportunity there. So we're going to cut back a little bit. We took 6, and I know like Forest City typically takes 70. They took 20 or 25, and I think a lot of other companies did the same thing. So the measurement of what NAWLA is today and what it was in the past, while it is relevant, I think it could be we could be a little bit harsh today. The critics could be a little bit harsh today because it was a combination of a challenging marketplace and maybe some of the and I think Gregg used the word dinosaurs of the pure commodity lumber guy, not having the same type of opportunity at that event that they've had in the past. Because, the one thing I think we all recognize is that the wholesale distributor, the wholesaler, broker, all of us have evolved over the last 20 years in trying to be flexible and meeting what our customers and the market demands require. And a lot of NAWLA memberships are not lumber brokers anymore. They're remanufacturers of product. They are wholesale distributors of non-forest products, right? And so you have a combination of a lot of different things that are there that are valuable to the membership, but also invaluable, not so much to some others. And so the one thing that NAWLA, quite frankly, I'm been very concerned with, because I'm a commodity lumber guy, is the representation or the continual lack of representation of some of these commodity sawmills and plywood manufacturers and OSB manufacturers and things of that nature, and recognizing that they're seeing value in other regional events.
Good point, Kyle. That was exactly like right during NAWLA, there were some big regional events for some buying groups and other things which literally pulled away from NAWLA, right?
Yeah. But how was the barbecue down there?
No, look at so we
it's good.
Like it was an easy flight for us, and like I said, Kyle, we did get good conversations out of it and everything. And what I wanted to ask is, look, it's a big job that you got putting that together. What do we see going forward? There's going to be another event coming up, or I can't remember the term of it. Maybe you could talk about that.
But let's start with Traders Mart, and then I'll talk about some of the other things. Like Gregg, mentioned, what's NAWLA's primary purpose for our industry? It's really networking and education, right? Like that's what it's centered around. And the Traders Market was built, started in Chicago, was in Dallas. I think my first Traders Market was in Dallas, and it was a small, intimate event.
It started in Dallas.
It started in Dallas. Okay.
Started in Dallas.
Yeah, and then moved to Chicago.
Regency at the airport.
Right.
It was. It was like, I think it was like Friday, Saturday, because, there was this idea where like, we want to, hey, we want everybody to be able to take a flight that without a connection. And we want to take traders away from their desks, but not away from the work week. So it was like Friday, Saturday, Thursday night. My just thing is, I think, when I think over the, whatever, 30 years that it's been, Kyle, I think it's at a turning point that it needs to be. And like, listen, I'm part of it. I'm part of like, quote unquote, an old guard in terms of NAWLA guys. I mean, and there's always this like when we want to hold on to the past kind of thing. This is the way we did it, and we don't do this. But I'm in a place where I'm going, hey, I think NAWLA needs to be willing to blow up the traders market for it to survive. Yep. That's where I'm at, because I'm at and I want it to survive, and I want good things for NAWLA, but I think there's been a bit of a glide path, and there needs to be something really.
How do you schedule it differently where you're not running into other regional programs?
So let me comment on that. One thing I think, Gregg, what you've addressed or pointed out has been addressed on the board this past year. And one of the things the traders market I recognize, quite frankly, is it could be a thing that being too much to too many people and losing sight of where some of the opportunities to network and provide education could be beneficial. So back in 2015, I think it was 2015, 2016, NAWLA made a decision that you could only go to traders market. You could only, if you're one, a member, and two, if you're a sawmill, you were required to exhibit, or a manufacturer or a service affiliate. So you had to be a member and you had to exhibit. So the barrier of entry to that event just became much greater than what people used to do it in the past, where they would just go do an entry fee and come, like similar to what happens at Montreal now. You don't have to exhibit unless you're a sawmill of a certain size. You're required to have a tabletop there or something of that nature. So the barrier of entry for the commodity manufacturer, or any manufacturer for that point, became much higher because of that. And that was a reason, because in the downturn of 2008 through 2015, NAWLA lost a ton of membership. People didn't want to spend money because, business wasn't there to support being part of another association. So that bolstered NAWLA's membership, but also alienated some opportunity with some of the manufacturers. One of the things going forward with Traders Market, we've already voted upon it and it's been approved. You will not be required to be a NAWLA member to go into to exhibit or to attend. You need to be part of the NAWLA bylaws. Like we can't have a non-wholesaler attend the event, but you can, if you're a wholesaler that's not a member of NAWLA and you want to attend the event, or you're a sawmill that's not a member of NAWLA, you want to attend the event, or a service affiliate, you can now do so, or will be able to do so going
for Charles
forward.
then.
Yeah, Charles is a good example of he wants to see it, have an opportunity to see what's going on there. Maybe he gets some benefit out of it. Maybe he doesn't. I don't know, but it is an opportunity for people that are curious.
Kyle, to your point though, I think you'll be able to get more membership that way because if we've had this discussion in the past, right? Why am I not a member?
Yep.
Well, where's my value? Right.
And then
if I can't go to an event,
I think that's a big thing.
That value.
Yeah. And then secondly, knowing the challenges that Gregg pointed out that NAWLA has, one of the biggest things that I really worked hard on this year was looking at the board members that were falling off and trying to get board members on that have been critical of NAWLA on the board so we can make the appropriate changes. So if you guys, I'm not going to name the names, but you can look at who we've added to the board this year, manufacturers, wholesalers, and the like, that are right now, like, not so sure exactly what the direction of NAWLA is. And what I've, worked hard in convincing them is, if you're not sure, why don't you be part of it and help mold it and get people with differing opinions on the board that aren't just going to rubber stamp things and get things, moving. So what's up next is a full revamp of the review of the bylaws, hopefully to change some of the restrictive nature in those bylaws that doesn't allow, certain people, wholesalers, if it's not defined as a wholesaler properly or a manufacturer properly, because what's the definition of a wholesaler, in real life? That's very hard to determine. But we want to make the bylaws open enough that allows for some of these nuances to be able to be available to that membership, and then all of our events going forward. So the whole purpose of it really, though, is to lower the barrier of entry for the manufacturers to want to see value in being part of this supply chain.
And the other events come, Kyle?
Yeah, so there was we did a long, we hired a research firm a year ago prior to me being the chair. And that's one of the things that I pushed through the executive committee to understand, I wanted an unbiased view of what's happening and have somebody gather that data and information and give us some insight of, what people are asking for from an educational standpoint, from a networking standpoint, and so forth. And one of the big things was, NAWLA used to have a spring meeting. That's where it came from, turned into kind of a leadership summit, and then just another kind of spring meeting. But the resounding context that they brought to us was that they were looking for something that was higher level for executives, owners of organizations, corporate leaders, to be able to have an opportunity to go and have a TED-like event or summit where they could go out there and have the opportunity to collaborate and meet other like leaders in the industry, and have the opportunity to learn some things about people that will be obviously attending that event, and networking and associate as well, and then also adding additional content that would be beneficial to a CEO of Interfor or a CEO of Swanson.
You should get Gregg's buddy Brian Westbury to show up and give a speech. He's pretty energetic.
So that's what the T100 event is. It's really, I used the idea of how can NAWLA create an event like the World Economic Forum in Davos, Switzerland. That's sponsored by XYZ company. NAWLA could be the conduit to bringing the supply chain for the North American market in one spot that could allow for people. You don't have to be a member to go to that event. We could have executives from the banking industry, from the insurance industries, from the railroads to otherwise. There's no restriction from a NAWLA membership perspective in order to be participatory at that event, and having a place to collaborate and expand and grow your network.
The one thing that Davos, the only thing that always bothers me about Davos is like that Keir Starmer guy. The men and women all look exactly like him. If you've ever seen that guy's picture,
that and the drinks were really expensive.
But
you mean like everybody flying in on their on private jets to tell everybody else that they need to conserve energy because of climate change?
Based on the NAWLA stuff, though. Who else do you want to give like a shout out to? I put down in the bottom corner the NAWLA website so people can see it. It's NAWLA, NAWLA.org. And
correct.
So people like Charles that are listening saying they're on the edge about getting involved. How do we tip them over the edge to sign up and just like attend the next event or attend an event?
I want to be clear on something though. It's not that I don't want to join. I just want to return on my investment, just like my time.
Right. Yeah, that's totally understandable, Charles. And one thing I think I could tell you, and I think Gregg would concur, like every event I've gone to, whether it's been well attended or otherwise, I've always come back with an opportunity. Just as much as I've come out with opportunities at other regional events too, like the Montreal Wood Convention or MLMA or any, WWPA back in the day. Like you get what you put into it, right? And you get what you put, what opportunities are presented to yourself, and you address those as they appear. As far as plugs, Ashley, I think the thing I'd like to plug is the T100. It's T100.NAWLA.org. Take a look at that. We have a long line of speakers and presenters there. We have commitments from major distributors, leadership team. I think Shyam Reddy from Blue Links. We have quite a few others from Boise Cascade, as well as manufacturers and other remanufacturers alike. Executives from them attending at the event. We are working on a couple additional speakers to add to the content. Hopefully we'll be able to announce that here in the very near future as well. That'll be held from March 16th to the 18th at the Ritz-Carlton Laguna Niguel in Dana Point, California.
Do you guys still do the Mulrooney Award?
The Mulrooney Award, yes. We announced the recipient of the Mulrooney Award at the Traders Market. Instead of this year, what came out of that survey from the independent research group was spending 2 hours at a luncheon with a guest speaker was time that a lot of people didn't get, in addition to be able to network on the trading floor. So that was one of the outcomes of that. And so this year we did not have that luncheon to announce it, but we announced it at a breakfast meeting this year. Donna Whitaker is the recipient of this year's Mulrooney Award. She will be in attendance to formally be presented to that here at the T100 event in Laguna
Don
Niguel,
is awesome, and I mean, I want to get Gregg nominated to be in the running one of these days. What do you think, Gregg?
Well, yeah.
I don't know. Ash, that may be a bit
I can see that bird sitting behind you right now.
I think I'm still too young. I think I'm still too young to get the award.
All right. I'll deal with it. Well, listen, Kyle, this was great having you on, and like anybody that wants to join NAWLA or talk to, make sure they contact you. I put the T100 URL down in the bottom left there too. But yeah.
Yeah, no, I appreciate it, guys. I think the thing is, like, NAWLA, to Gregg's point, is at a crossroads on a variety of different things. I think the industry has evolved, and we're very focused on bringing value to all of the membership base and reviewing the membership base, because it has been somewhat limiting to the opportunities of people that are moving tremendous amount of commodity, specialty, and like product in the forest products and building materials world here in North America. So we just want to make sure that we continue to build off that. I can tell you, as long as I'm going to be involved, which on the board, it'll be one more year, getting these commodity manufacturers to continue to provide or to be engaged in the event or in the association and in events to come will be a big deal. For what it's worth, NAWLA is a promoter of the MLMA, promoter of the Montreal Wood Convention. We recognize these things are necessary on a variety of different levels and provide focus for our membership. I mean, NAWLA's an exhibitor at the Montreal Wood Convention. Montreal Wood Convention is an exhibitor at the NAWLA Traders Market. MLMA has been that in the past, and so have others. I think there's a way to adjust and create a format that provides real value to the overall industry and get back to some of the roots of the traders market, but also address the evolving marketplace and supply chain that a wholesaler brings to the table.
I think you've got a big job and a lot of responsibility, but I'm sure that you're going to handle it exceptionally, with your talents and your time. So that's, it's really
for the last 3 weeks. He's got 3 weeks left. Come on. I think he can cruise through that. Right?
Gregg has done that job before, and Kyle's in it now. And from an observer from the industry, that is a thankless job. That's a tough job. And
thank you.
You're doing something for us, right? So thank you very much for all your efforts.
Kyle said, it's one of those deals where, you get out of it what you put into it. And it was a lot of work, but you know what? I wouldn't have not done it for anything because of how much value I ended up getting out of it in the end. So anyhow, kudos. That's my shot of gratitude right there.
Well, thank you for having me today. I really appreciate it.
Always great having you, Kyle.
I appreciate it.
Cheers, guys.
Thank you.
See you guys.
Yeah.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.